Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, the Omicron variant, plus factors like tapering at the Fed, have all sent U.S. stocks sharply lower these past several sessions, but on Thursday they bounced back, and that was especially true for travel-related names like airlines. What's the story in the global markets and your outlook considering all that's going on?
Yes, if you look at the U.S. market, it did quite a nice rebound yesterday. Dow Jones was up 1.8%, S&P 500 was up 1.4%, and NASDAQ was up 0.8%. There had been concern about the speed up of tapering and also earlier rate hike concerns. And also on top of that, Omicron variant-related news were hitting the market, and that has resulted into continuous falling of the U.S. market in the past several days, but it did recover yesterday. Main reason for that is because in regards to the Omicron issues, yes, it is spreading fast, but nevertheless, level of the symptoms are not that significantly severe, so therefore people might be considering that it will be the last end of this COVID-19 related concerns. So we saw quite a bit of recovery rally led by the energies and industrials and real estate and financial sector. They're saying that it is probably time to buy the cyclical names tied to the economic recovery going into the futures. On top of that, if you look at the overall jobless claims, it came in at about 240,000 or so, which is continued to be improving from the historic highs due to the COVID-19. Now it is getting to the level where it was the number that right before the COVID-19 era. So we think that the overall economic recovery is in the right track, and we see that the overall lendings are happening quite reasonably well, and that economic growth rate should be quite strong in the future. So this is the reason why the share price has recovered. However, though, we do see some of the weaknesses happening after the strong recovery yesterday. The futures markets are showing a slightly declining, but not that much, pretty much flat to slight weakness. All in all, we probably need to wait and see how things plays out in terms of the Omicron news, and probably take some time, about 2 weeks, to really recognize how severe this news is, and also overall the conditions regarding the budget related and the debt ceiling related, all that needs to be settled down. We think that this will be done quite soon, just that because of the uncertainty still remains, that the volatility should be continued over the next couple of weeks or so.
We'll have to watch all of that very closely. And here in Korea, the market was down in the morning on institutional selling, but turned around this afternoon. The KOSDAQ up even more than the KOSPI. Most of the big names higher, with the exception of the major chip makers. Tell us about the domestic market.
Yes, that's right. We did see quite a nice rebound of KOSPI as well as KOSDAQ. It seems that since the starting of December, Korean markets are showing quite a bit of strong movement. Until end of November, Korean market was down year to date, which was one of the weakest performing country amongst all the developed and OECD countries. But recently, in the last 3 days or so, we see very strong movement happening in KOSPI and KOSDAQ. Yes, we did not recover above 3,000 level yet, but nevertheless, we did see KOSPI rising up to 2,968, up by 0.78%. And KOSDAQ is right below 1,000. It was up by 2.15%. It seems that the movement's happening for a lot of the economic recovery-related stocks. In terms of the semiconductor industries, it was pretty much flat. because it was doing very well in the last 2 days, so probably taking some breather. All in all, this is good news because we are seeing foreign investors coming back to the Korean market continuously in the last a few days. We did see foreign investors net buying of 155 billion of KOSPI and also 157 billion of KOSDAQ. And institutions are also net buyers. Only the sellers are the retail investors, which means that overall supply and demand in terms of the overall equity market wise, we think that it is in good position to further rise in the future. Also, once the December is over, in terms of the related to the taxes, we think that that will go away, and therefore the retail investor might be coming back in terms of high net worth individuals in January. So we think that there could be some Santa rally or year rally, the New Year's rally that might be happening in the future. So Korean market is in a good position, and if we look at the overall earnings numbers, it looks quite good. So therefore, we shouldn't be too worried until the end of the year.
And a big story today, the National Assembly passing a record-breaking budget for next year, 608 trillion won, about $515 billion, and that includes lots of support, low-interest loans for small business, also direct support for freelancers, taxi drivers, bus drivers, and so on. Tell us about this budget, what you make of it.
Yes, this is increasing by about 3.3 trillion won from previous year to 607.7 trillion won. Which is about $516 billion worth. Obviously, this is to support swifter economic recovery and help those hit by the COVID-19 pandemic. We think that this is a necessity because if you look at the monetary policy-wise, as you know, Bank of Korea raised policy interest rate by 0.5 percentage point, and they've been doing it twice this year, and then they're planning to do additional twice in next year. So obviously, the monetary policy is a bit more tightening, even though it is still low interest rate environment. But all in all, we think that more additional boosting measures needed in terms of the fiscal policy, and therefore this kind of increase is very important. It is rising by about 8.9% increase from the year before. If we exclude the supplementary budget, this is in the right track. We think Korea needs that kind of support because we do see quite a low-income bracket to mid-income brackets who are suffering because of the COVID-19 event. If you look at the consumer debt to GDP ratio, it is probably one of the higher countries amongst the OECD countries, and we need to see that improving. We are seeing a huge amount of inflow, additional the COVID-19 related people. So this is really negative news in terms of domestic consumption wise. So we think that we need additional these boosting measures to the fiscal policies, and this is a necessity that has gone through, which is good news for the market.
Well, let's hope that it is. Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us on that and everything else. We appreciate it. Have a great weekend.
Thank you. You too.